You know, we're all used to hearing about youth gun violence through the lens of politics, right? It's always about policy debates. But what if the most powerful solution had absolutely nothing to do with any of that? Today, we are diving into something called the SHIELD Initiative. It's a pretty radical idea that uses the cold, hard math of the insurance industry to do what legislation hasn't, and that is to make saving lives the most profitable option. Let's get into it. So here's how we're going to break this all down. First, we'll look at the staggering scale of the problem. I mean, it's huge. Then we'll get into exactly how the SHIELD's core mechanism actually works. After that, we're going to dive into the math, the numbers that create this financial tipping point. We'll show you the super simple funding model that powers it all. And finally, we're going to put its legal armor to the test. Okay, so to really understand just how powerful this idea is, we first have to face the brutal reality it's designed to solve. And honestly, the numbers are just staggering. Let's start small to make this huge national issue feel a bit more real. We're not even going to look at the whole country yet. Let's just focus on two American cities, Chicago and Philadelphia. In just those two cities alone, more than 600 young Black people are killed by gun homicide every single year. I mean, just let that sink in for a second. Two cities, 600 lives gone. And that tragedy, well, it just scales up nationally. We're talking somewhere between 2,500 and 3,000 deaths every year. That's 7 or 8 young people lost every single day. It's so bad that homicide is now the #1 cause of death for Black youth in America. For young Black men, the homicide rate is a staggering 14 times higher than for everyone else. You know, when you're faced with numbers like that, it's so easy to just feel hopeless. But this brings us to the core question of the SHIELD Initiative. What if you could create enough targeted financial pressure in just 1 or 2 places to force an entire industry to finally do something about this? So how does this actually create change, right? Well, this isn't a charity, it's not a government program, it's a mechanism that uses the fundamental logic of the insurance industry against itself. Okay, here's the core mechanism. It's basically 4 simple steps. A community cooperative, called the SHIELD Fund, helps families purchase large life insurance policies for their kids. Now, this is the really critical part. The parents, and only the parents, own the policy. The parents are the sole beneficiaries, and the fund itself has absolutely zero financial stake in any payout. The money goes directly to the family, period. So as thousands of these policies start to get concentrated in just a few areas, it creates what's called a tipping point. This is that magic moment where the insurance industry's own math tells them, hey, it is now more profitable for us to fund violence prevention, things like mentorship, job training, community safety, than it is to keep paying out millions and millions in death claims. And you know what? We've seen this exact logic work before. Think about it. Auto insurers didn't push for safer cars and roads out of the goodness of their hearts. No way. They did it because every life they saved was a claim they didn't have to pay. It was a purely financial decision. All right, now let's get into the big math. Because this is where the strategy goes from being a clever idea to a concrete, powerful plan that just can't be ignored. The numbers, well, they're the entire engine of this initiative. Get this. In just Chicago and Philadelphia, if you enroll half the at-risk youth, you create a potential yearly payout for insurers of up to $330 million. That is way more than the entire industry spends on federal lobbying, and that's from just 2 cities. And what happens when you scale it up nationally? Well, with 1.5 million policies, the potential annual exposure just skyrockets to $3.3 billion. That's more than 19 times their lobbying budget. At that point, investing a tiny fraction of that amount in prevention isn't a moral choice anymore. It becomes the only rational business decision they can make. So the next logical question is, okay, who's paying for all these insurance premiums? Because the families in these neighborhoods often can't afford them. And this is where the community cooperative model becomes so powerful. The funding is all based on a model of community cooperation. The plan calls on the 5 million Black households in America that earn over $100,000 a year to collectively fund the first wave of policies. And to cover the first 200,000 policies, the cost comes out to just $72 a year for each of those households. And what does $72 a year break down to? $6 a month. That's it, seriously. Less than a streaming subscription, less than a fancy cup of coffee. That is the price to fuel this entire engine of change. Just $6. Okay, but what about the legal challenges? Because you just know the industry lawyers are going to fight this tooth and nail. So let's look at the objections and see how the initiative is designed from the ground up to be, well, legally bulletproof. The industry's main line of attack is going to be to label this as STOLI, which stands for Stranger Originated Life Insurance. This is a totally illegal practice where an investor who has no connection to a person basically bets on their death for a profit. They are absolutely going to try to frame the SHIELD initiative this way. But that whole argument just completely falls apart the second you compare them side by side. Look, in a STOLI scheme, a stranger owns and profits from the policy. With the SHIELD, the parents own it and benefit from it. Most importantly, a STOLI scheme is a financial bet. The SHIELD fund has explicitly zero financial interest in any death benefit. It's designed to protect families, not to enrich some outside investors. The legal defense is literally built right into the structure. The fund's charter legally prohibits it from profiting. The model is pretty much the same as an employer paying an employee's premium, which is a totally common and legal practice. And here's the really brilliant part. If insurers start systematically denying coverage in these neighborhoods, every single denial becomes more evidence for a potential discrimination complaint. Their own actions would just create even more pressure for change. It's a checkmate. And that's what makes this so completely different. It's a system that's designed to be completely independent. It doesn't have to wait for new laws, it doesn't need government funding, and it certainly doesn't rely on a change of heart from people in power. It simply takes the cold, profit-driven logic of an industry and points it directly at a crisis. It forces a financial calculation where keeping children alive becomes the most profitable option. Because in the end, the math doesn't care about your politics.